We have so many earnings stories to work with. We've got policy to work with. And this Boeing bond offer is sort of leading this narrative that, at least if you look at the credit markets, as Jim Casey told Faber in the last hour from J.P. Morgan, in his view, we've moved from the crisis chapter to a more traditional recession chapter. Does that sound right to you?
You know, it does sound right to me. Again, I think that the great thing that's happened here certainly is that the Fed and the Treasury acted very early to ensure that the financial plumbing was working well. And that's what enables companies like Boeing to raise $25 billion pretty much overnight. And so when you have that kind of liquidity in the market, people can begin to think about how they look through the valley. And that's really what's important here. You know, there's a lot of tweets and there's a lot of emotionality and there's a lot of stuff that happens on a daily basis that you all report on. But if you take a step back from it for a second, you know, we can start to begin to model out how this could look and be able to look through the valley, which is clearly coming here in the second quarter.
MasterCard is another good example, Jeff, on the conference call this week, was asked about how you start to get people on long-haul flights without a vaccine. And the answer on the call was, I don't know. Can you do that without a vaccine? I don't think so. So how are investors going to process virtually every headline when it all comes down to a binary outcome, which we hope comes this year, but could come next year? It might never come at all.
Well, it's going to come. I mean, you know, I think we've never before had the amount of really bright scientific minds focused on a singular issue. And honestly, it's going to come. And so it's just a matter of when, in our opinion. And I think investors have to look through, I think, probably most of 2020. We may not see significant long-haul flights until 2021. But again, as I said, I think the last time I was here, if you're building a 5-year discounted cash flow analysis, you have to budget in some or project in some amount of return to a normal behavior. And there will be long-haul flights again, and we will be able to be in arenas again, and we will be able to gather with more than 10 people again. I can't tell you specifically when that will happen, but it's going to happen because that's who we are as human beings. And so I think at some point we're either going to get a vaccine here or we'll get some sort of a herd immunity and we'll move on with the new normal.
Hey, Jeff, it's John Fort. Given the comeback that we've seen in the markets thus far, I'm wondering what you think is priced in terms of recovery. I mean, Starbucks plans to have 90% of stores open in June. They tell us Qualcomm is modeling a U.S. recovery really taking hold beginning in June. Also, do you think a June ramp in economic activity is priced into the market? And do you think that's possible without New York? And does it assume protocols like testing and contact tracing?
Well, you know, I do think some of it's priced in. It's hard to see the rally that we had in April isn't pricing in some amount of good news. I think it is. But we have to remember, here in New York, we are living in a fishbowl, and it's really, really hard when you live in the New York area to remember what life is like outside of New York because we don't get to see it, touch it, feel it. But I talk to a lot of people all over the country, and they're having a very different experience around the experience that we're having in New York. And they're anxious to get back out, and they're anxious to be social, and they're anxious to be reopening the economy. And they probably should be. I think it should be measured and controlled. I think we need to have things in place to ensure that we don't inadvertently spike the virus again. But we should be beginning to think about how to get back to normal. And when we begin to turn that economic recovery back on again, we'll get a better sense in June and July how that's going. Again, I do think when you look at July, specifically when you look at second quarter earnings, they're not going to be good. People need to get that in their heads. And so, but if we start to see economic activity that picks up again, people will begin to look through that trough as the markets always do. It's a discounting, you know, the markets are a discounting mechanism. And if we see good economic activity in June and in July, people will look through the second quarter earnings.
Yeah, Jeff, I think you make a key point in terms of the shift in sentiment based on your geography. I'll tell you, here in Westchester County, I'm even seeing more cars on the road, more people out and about. I think just spring fever has set in, if you will. In terms of the future, the long-term future of investing trends, I think of Walter Isaacson and the op-ed he wrote recently. He was on our show a couple weeks ago talking about the fact that he believes we're entering a new era, a life sciences era, that we were in this information technology phase in recent decades, and before that one that was powered by physics, but he believes that healthcare, biotech, and some of these other types of life sciences are really going to power trends of the future. From an investing standpoint, how do you see it?
Well, we agree, and we've been saying that for a number of years, Morgan. As you know, we've talked a lot about the amazing amount of science that's gone on. The capital markets have been the thing that's actually enabled that to happen. So private capital, as opposed to governmental capital, has really been the thing that's unlocked this wave of companies. By the way, close to 400 public companies today, which is 1/10 of the public companies we have in the United States, are biotech or life sciences companies that have come public in the last 7 years. So that wave is upon us, and those companies are doing some great things. Listen, we're watching what Gilead is doing. If you remember a couple of years ago, Gilead was dragged up on Capitol Hill, and they had to talk about how they were pricing their Hep C drug. And now all of a sudden we're all counting on remdesivir to be the savior for this. So what this industry has the capability of doing, unlike many other industries, is solving really intractable problems. And they do it almost on a monthly basis. And so it remains extremely exciting for us. We agree with Walter Isaacson, have been in this space. It's a big push for Cowen. And listen, we've seen a bunch of offerings that have happened this quarter already. The markets are open for biotech. And I would say, it looks to me as if you're going to make one bet, I think I said this last time I was there, if you're going to make one bet in the markets, you have to bet on healthcare, because we know over the next decade it's going to be a critical area, an industry, unlike many others.